Hello, I'm Oliver Renick. Welcome to Market Overtime on the Schwab Network. This is a very special edition. We're recording live from San Francisco at Charles Schwab's annual RIA mega conference, IMPACT. Everyone's here, the ideas are flowing, and there is no shortage of big topics to discuss. Investors are balancing, trying to prepare for Trump 2.0 with the possibility that inflation's still got a surprise up its sleeve. It's all, of course, happening against the backdrop of a massive, raging bull market led by NVIDIA, whose earnings we just saw last night. And, of course, here at Schwab, some big changes, too. In the corporation itself, the transition from Walt Bettinger to current president and incoming CEO Rick Wurster, who joins us here, the future CEO of the Charles Schwab Corporation. Rick, great to see you.
Oliver, great to see you, and it's a real pleasure to be here with you.
I feel like from my angle, when we launched the network and then the acquisition, we spent a lot of time in our relationship and our discussions about that integration, which did fully finish earlier this year. Tell me about that first as you guys close the door on that. Seems like a good timing then for a leadership transition as well in my mind.
Well, it's so nice to be sitting here in this position today, a year plus removed from that integration, because now we have together the best of everything that Ameritrade had and the best of everything Schwab has. We've put it together for clients. We've gotten through the difficult period of bringing it together, of having clients migrate over to Schwab, and now it's all systems go for clients. And it's really rewarding to see the impact that is having. As I walk around here in San Francisco and talk to our RIA clients, you really can tell we're a year out from this now, and clients are delighted. In fact, our client satisfaction scores are as high as they've ever been, both in our retail business and in our advisor business.
Deep congratulations, by the way, and an earnest one. It's been a pleasure kind of learning the way you think about the business and markets. I do want to get to some of that. Tell me about yourself, Rick Wurster, your background, because you have a very interesting one as a portfolio manager. Obviously, you've been at Schwab for 8+ years, but before that, I mean, you're a market technician, you got a CMT, you seem like the type of guy who I would run in the bank.
Well, hey, thanks, Oliver. I appreciate that. It's been good getting to know you. Yeah, so my background, I'll start after business school. I went and worked for McKinsey & Company, a global consulting firm where I worked for large financial services companies. And then I left and went to Wellington. And at Wellington, I was on a fast track there, leading a part of the investment business, and actually moved out to San Francisco to get off the fast track a little bit for one of my kids who actually needed to move to San Francisco for her development. And that move ended up being a great move for us and our family, because I learned a lot about being an investor. That's when I got my CFA, when I got my CMT. And going through that experience and building a business around being a portfolio manager and a trader has helped me really understand our client base, both at Ameritrade and at Schwab. And I left Wellington, came to Schwab, and I've come up through our asset management business, our wealth business, and I'm delighted to be taking on the role in January of CEO. I've got some really big shoes to fill. For 49 of the 50 years that Schwab has been in business, we've had only 2 CEOs. So to follow that is a big deal to me, and I'm going to work incredibly hard to make sure we deliver for our clients.
And one of those CEOs is the namesake. So it's a really special group that you're in. Given your background as a portfolio manager, as a consultant, as somebody who's solving problems with a financial focus, when you're here at Impact and you know Schwab's got products and the RIAs have products, there's obviously this ecosystem where everybody is symbiotic in a way, but there's also a little bit of competition. Do you walk around and you go, oh, I would put that in there. That seems like a good idea. Maybe that one's too expensive.
You know, my message to the RIAs is that collectively we have roughly a 14% share of wealth in our country. And there is such an opportunity for us to collectively go after that other 86%. And that's why when you come to this conference, I always say it feels less like a business conference and more like a family reunion. It feels like we're all in this together. It feels like we all have the same purpose, which is to do right by the client, to make a difference in their day-to-day financial life. And so I think we do work together. We do share ideas. We all want what's best for the client.
I like that, and I think that that's also unique to hear that from a bank leader, where a lot of times I think Americans associate banks with sort of being on the cutting edge of profit, overlapping with greed, overlapping with risk. One of the things that people here are obviously trying to think about is Trump 2.0. policy-wise, it seems like one of the first things they're going to do is make changes at the SEC to kind of cater towards a bit of a more speculative asset class. I wonder, in that context, in that backdrop, where does Schwab sit in terms of how it sits on that financial spectrum of being reliable, being consistent, being honest, being straightforward?
Well, on those measures, I mean, that's what we stand for. Our business is built on trust and has been for 50 years. And that's going to have to be a way we set ourselves apart. And part of being a trusted firm is delivering our capabilities at great value. We always say what we do, we try to make the client have no trade-offs. You can get great service. You can get a great platform, great product, great research, access to you and your insights on this network. And you do it all with industry low costs. So that builds trust, and that's at the core of what we deliver to the client.
I'm curious what you would think about an analogy that I've used kind of personally when talking to people about the company, but I feel for an investing audience might resonate. I'm curious how you think about it, but sometimes I think about Schwab as almost kind of the Walmart of finance. We've seen Walmart, this incredible company that has been able to basically offer what people need at variety, groceries, staples, discretionary things, higher ticket items as well. But stock has done so well because people know what they get, it's reliable, and there's a variety of things. I say that because about a year and a half ago, when there were concerns about the way cash sorting was changing, interest rates were changing, one of the things that I felt people misunderstood a little bit was that money was still staying in the system, where the Schwab is almost like the Walmart in a way where there are so many different things there. If you're not going to buy the TV right now, well, we've got the groceries for you. We've got the simple stuff, and we've got the complex stuff. Is that a fair analogy?
Well, I think you're spot on in terms of our ability to provide end-to-end services to our clients. We have 43 million different client accounts here at Schwab. Our goal is for every one of them to have their needs met in an exceptional way. Some of the clients, when they walk through the door and listen to the network, they want to be active traders. They want to be very active in the market. There's others who walk in the doors of one of our 400 branches across our country and say, do this for me. I want help. I don't want to have to worry about this on a day-to-day basis. And the strength of Schwab is that we can deliver that all to a client. And we do it at an exceptional value, no trade-offs, and with industry-leading service. That's really our offer to the market.
I love that. It's a very good way to describe the kind of holistic nature of the offerings. Is there anything that you feel product-wise is not there? Is there anywhere that you want to push, either on the risk spectrum or on the vehicle spectrum? We've talked a lot about ETFs, but there might be regulations changing to bring in new types of crypto products, et cetera. How do you view the kind of future of what you want to bring in? Is there anything that's not in that big basket of offerings right now?
Our company has been built on innovation. If you go back to the start of the firm, Chuck innovated by making investing more accessible, by bringing the cost down so that everyday Americans can get invested, because back then when Chuck started the company, you couldn't do that. So we'll continue to innovate year in and year out. I think the last 4 years in bringing together the best of everything Ameritrade had and the best of everything Schwab has had, we've never been in a stronger position to serve clients than we are in today. To me, Thinkorswim is a great example of that. Thinkorswim's, I think, the leading trading platform in the industry. And we took it from Ameritrade. We made it continue to serve Ameritrade clients with that. But we're also making it available to Schwab clients. And we're seeing a really high uptake on that. The other thing we're seeing is it's going the other way as well, which is a lot of Ameritrade clients who are at Ameritrade to trade are now taking advantage of the Schwab wealth capabilities. That's really exciting to be able to have the best of both firms available for all clients. There's a lot of innovation we'll see. We're seeing more personalized investing, and that's an area of growth for us. Cryptos more broadly, there's interest, and we have a lot of ways to access crypto on our platform, and there will be more in the future as well. So lots of innovation, and that's really at the foundation of our company.
More in the future? Anything else you want to tease on that?
Well, I think as it relates to crypto, we recognize there's client demand. Okay. And we have made ETFs available. You can trade Bitcoin futures at Schwab. You can get access to closed-end funds. We would at some point like to offer spot crypto trading and the ability to hold the coins here at Schwab. We have been waiting on the regulatory environment to change, and we're confident that it will. And when it does, we're going to want to be able to offer that capability to clients.
What is visible in terms of how that changes the risk profile of the company balance sheet if that happens?
Well, that's one of the regulatory things that we've been waiting on. It used to be that when clients held spot crypto and you were a bank, you had to hold capital against that. And that's not true of client equity securities or client fixed income securities. Crypto is being treated differently. And so as the regulatory environment changes and that's no longer a requirement, which we expect it won't be, it's client assets, we would expect then to be able to offer something to the market.
I appreciate that insight. That is a distinction in how the asset class is treated from a regulatory perspective. I guess what I'll ask is on equities, though, for example, of course, you've got margin requirements. Somebody's got a huge position, right? You have to monitor that. Do you know what that process would be like if there's crypto spot held while folks are trading? How then you would have to tweak the kind of margin and risk management side?
Well, margins, of course, when you're borrowing on a stock, and that makes sense to ask for collateral against that requirement, which they have in the stock. And as it relates to borrowing crypto, I don't know the details of exactly how that will work yet. It's something we're going to work out as we roll out our offer at Schwab and work through the regulatory requirements that come with what we're going to offer.
Okay. In this past quarter, market was pretty happy about a few things. Number one is the company after 2023, analysts are expecting you could hit double-digit revenues for next quarter, positive revenue growth again. The cash sweep that folks were concerned about seemed to have improvement. It seemed like your messaging is that you feel very comfortable generally about some of the kind of rate-driven ailments of the past. Is that fair?
Well, our business is really thriving right now. And to me, it starts with the client. If you look at our client satisfaction scores on both sides of our business, they've never been stronger. And ultimately, our margins will go up and down. The economic conditions will change here or there. If at the end of the day, we are nailing it on behalf of clients and delighting them, we are going to be a successful business over time. Yes, we have a number of economic tailwinds. And what's rewarding about that is that the economics of our business are catching up to the client strength that we've consistently had. And that's rewarding to see because a lot of Schwab people have worked hard to serve clients, and it is nice to see the economics catch up to all the client strength we're seeing.
Do you see anybody as the competitor? It's such a rare thing to see giants basically in industry, kind of a rare generational thing. Who do you view as the competition for Schwab right now, that incremental dollar?
With 43 million client accounts, the number one most important thing for us is nailing it for them day in and day out. We can have a growing, very successful business if we just nail it for those 43 million client accounts every day. That said, the environment is competitive, and we stand out by offering an experience that we think can't be matched in terms of the service, quality of our platform, the quality of the education, the quality of this network, all of those things which help us stand out and make our offer, we think, unmatched in the industry, which is why we're growing so well. And you see it in our organic growth levels.
Are there areas where if you do see volatility in rates again, if there's anything that puts pressure on some of the cash sweep, are there products that you then feel that, okay, these will kind of fill in that margin gap? Where is kind of that higher margin product if there is any more macro disruption?
One of the areas that's been growing rapidly for us is our wealth business.
Okay.
And what's wonderful about our wealth business is if you look at our clients that enroll in our wealth solutions, they actually have the highest client satisfaction scores at the firm. And at the same time, they also happen to have higher revenue per client asset than the rest of our business. That's an area where there is a bull market for advice in our country. And we have been successful in delivering that to our clients. And when we do, it's diversifying to the business. But most importantly, our clients become even happier and our revenue goes up. So wealth is an area we're excited about growing and delighting clients.
There's 4,500 attendees here in Impact. I saw you say something that caught my eye, which was that, and we kind of mentioned it earlier, that obviously Schwab has products, RIAs have products, individuals, but you said something like, if you're ever bumping up and feel like we're edging you out, send me an email. Tell me about that.
Well, sometimes we'll hear feedback from the RAs about being worried that we're going to compete.
Okay.
And our message is one that we're in this together. No one has supported the independent advisor more than we have at Schwab.
Yeah.
Since 1987, we have been consistently invested in this business and have done a tremendous amount to both help the advisors on our platform and to help the whole community. And so we're all in supporting the growth of advisors. We never want to compete with advisors. Together we have 14% share of the market. We want to go after the 86% collectively. And I think that's a message that resonates. We're in this together.
A big enough pie to be shared. And I wonder also how that relates to general wealth tied to risk assets, a stock market at highs. How does that infiltrate your thinking at all? Is there any of your ex-PM kind of chart master inside of you think about that? Or do you have to kind of put the market to the side when you're now focused solely 100% leading the company?
You know, I still love to look at a good stock chart. It's the chartered market technician in me. Right. But thankfully, no clients rely on my ability to read a chart anymore. You know, what's most important to me in my job is making sure that collectively the 33,000 employees at Schwab are doing everything in our power to deliver for the 43 million client accounts at our company, and to deliver for the 15,000 advisors that we serve who are out in communities every day trying to help the grandmother who wants to contribute to their grandkids' education, or the family that wants to go on a vacation that they've dreamed about. That's what we're in this business for, to turn dreams into reality. And that's what I'm focused on, although I still love to look at a good chart every now and then.
How will you think about the investor base as the CEO now when you start Jan 1st? Does the mindset change at all when you're talking to investors, thinking about what you want to do with shareholder-friendly activity, buybacks, dividends, things that are focused for us as the people watching? They want to know about the leadership, they want to know about the RIAs. There are people that own the stock or are trading stock, which has done incredibly well, especially over the last 3 weeks. A lot of financials have come to lead the market again.
You know, the big story here about this transition from Walt to me is, I think, how well orchestrated it's been. Mm-hmm. Walt and I have worked together closely for nearly the last decade, and extremely close to the last 3 years in my role as president. So what you should expect in January is continuity. Okay. So what clients have been experienced, we're going to continue to deliver for you, and continue to do everything we can to make sure their experience here at Schwab is world-class and unmatched.
What is your thought generally on shareholder-friendly activity? What's kind of your philosophy on buybacks? Are they productive? It's been paused for a little bit. Is that something that you feel is a priority, or the things we're talking about taking greater precedence? Because a lot of folks in markets that come from an equity research standpoint, there's a debate about buybacks and their utility and versus dividends. I'm kind of curious if you give a little tease on kind of what your thought process is on that for shareholders.
I think buybacks make a lot of sense at the right time. Okay. We've been building capital under what we expect to be the new capital rules for bank under Basel III. And at the right time, I think we will return to buybacks. Okay. We also have a lot of other things we've been doing with capital, including paying down the supplemental borrowing that we took out, and that's the paying down of that is what's fueling our economic gains and some of the revenue progress that you mentioned earlier. So it's an exciting time on that front to continue to pay that supplemental borrowing down, and eventually, as our capital builds, to be able to buy back stock.
That's a really huge point. I think that was at the core of the earnings. Can you give me a little elaboration on that in terms of the timeline for paying down that debt, and then also thinking about what that kind of represents moving away from that period?
Well, it's just, to us, listen, we're a profitable company, even with the supplemental borrowing. This is just an economic tailwind that will be behind us. And as we pay that supplemental borrowing down, you should see our earnings really accelerate. And it's one of the reasons where, if you look at our stock, it's been fueling our stock because the bank sweep balances at Schwab have stabilized very meaningfully. And as that happens, we've been able to really reduce the supplemental borrowing down really by a third from where it was not too long ago. And we're making lots of progress. We expect that to continue through 2025.
It did also surpass quite a few of the analyst estimates I saw as well in terms of where the cash would be. The last point is there any obvious kind of rate math on what would stress any of that again? There were a lot of folks, obviously, during that period when they saw the supplemental borrowing and said, hey, why are these stable big financial institutions doing this? Has there been any updates to the models basically from that period?
First thing I would say is, throughout that period of rising rates, we were always a stable, well-managed firm. The thing about Schwab and the way we manage our balance sheet is we don't take a lot of credit risk. We have a little bit of duration risk, but not much. We really only own primarily government-backed securities. So when all that was going on and there were institutions having challenges, we were in a very good position. The other thing about Schwab that keeps us so stable is that 90% of our deposits are insured. And so when the world gets tricky and people worried about banks, they don't have to worry about their insured deposits with us here at Schwab. So that period was one that we did just fine coming through. That said, we're looking forward to getting the supplemental borrowing paid down and seeing our economics really take off.
Another point to that, kind of full circle to where we started, is I think a lot of people didn't realize that that money almost all stayed in-house anyway, just moved to a different type of instrument.
Oliver, I think that's a really important point. In a period where rates went up faster than they ever had, people chose to move from sitting in bank sweep to go to a money fund or to go to fixed income. And we helped them make that choice. We want what's right for the client. Now in bank sweep, we over time, we believe there'll be transactional cash there and that there's some stable level of transactional cash that exists among our client base. And we think we're relatively there today. But that's exactly right. The money stayed at Schwab and we helped it find the best place for what they were trying to accomplish with their financial plan.
Rick, love the insight. Appreciate the business talk about the underlying fundamentals from a stockholder perspective. Appreciate getting to get to know you better. And obviously, thanks for the time here at Impact.
Well, thank you. I just want to say I personally love the network.
Thank you.
And I love the role you play helping for our clients stay in tune with the markets and see opportunities. So keep doing what you're doing. I really love it.
I appreciate that very much, Rick. Great stuff. Congratulations.
Thank you.
Again, a big congrats. Be sure to subscribe to Schwab Network's YouTube and Spotify channel. You can find all of our Market Overtime episodes there and on schwabnetwork.com. I'm Oliver Renick. Thank you for watching.